People wonder if I work for YouTube, are they going to report my income to the IRS?
Yes, through a 1099. All a 1099 is a tracking mechanism, basically saying, hey, I paid John Smith $100K, which means we're going to write it off. So what he does with it is his own business, but that is definitely a tracking mechanism and them telling the IRS.
And some people wonder too, they go, well, if I make less than $700 or less than $600, like I don't have to pay taxes. Is that true?
Very untrue. You could have $200 of income because you sold something on Facebook Marketplace, and that could be taxable.
Welcome back to the Think Media podcast. Sean Cannell here, and I'm fired up because this is episode 3 of a 3-part series I did with Matt Bontrager on YouTube Taxes Explained. Money-saving tips for content creators, advanced tax-saving strategies and loopholes for YouTube creators, and it's been a power-packed series. Now, I want to encourage you, you could definitely listen through this whole episode, but go to the archives, check out episode 1. That was kind of some beginner's tips and some foundational tips, although there were some juicy nuggets in there that you don't want to miss. Episode 2, Matt specifically broke down 5 of the best tax strategies and tax loopholes so you can ethically pay less taxes as a content creator, which what does that mean? It ultimately means more money in your pocket for you and your family, or more money in your business to be investing and scaling your business. More cameras, more gear, more travel, more vehicles, real estate, office space, a lot of different opportunities. And so check out those episodes. But now in episode 3, we're going to be diving into some of your questions. And I asked you to submit questions. I sent out a tweet. I put out a couple community tab posts. And I gathered some questions and we answered those here, which as just a side reminder, I would love to stay connected with you on social media. From time to time, we want to get feedback from you. And so you could definitely follow me on @SeanCannell, rhymes with YouTube channel, @SeanCannell on all the social media platforms. We're official Think Media on Instagram. If you're subscribed on YouTube, we do surveys and polls from time to time on the community tab. And we want to do this in the future. If you've got questions, let us know. Future episodes you want to see from us, future topics you'd want to cover. And we're also going to have Matt back on the show, so drop something in the comments related to that. Now, why should you trust Matt Bontrager? Well, he is a certified public accountant licensed in Nevada and the managing partner, co-founder of TrueBooks, an accounting firm specializing in real estate. He strives to help clients navigate complex tax code for their benefit, as well as keeping their accounting records organized and up to date. He's also a content creator himself, an in-demand speaker for events, masterminds, and small groups of business leaders and teams. And he is a specialist relating to the creator economy. Matt has a lot of clients that are at all kinds of different levels that are content creators. So you're really getting someone that's knowledgeable in something that a lot of CPAs are not. Now, today's episode is brought to you by thinkcpas.com. That is simply a website that'll take you to a form to potentially check out Matt's services and see if they would be a good fit working with them. We are TrueBooks clients. Matt is our CPA, and him and his team have been absolutely amazing. If you want to learn more about that, there's a link in the show notes. But with that, let's dive into the juicy content today. So we are back with episode 3 with Matt Bontrager from TrueBooks. In episode 1, we talked about the foundations of setting your business up right, saving money on taxes, what every YouTube creator should know to be able to pay less taxes, and a lot of missed deductions. In episode 2, we talked all about how to do some advanced strategies. We had 5 of those. We went pretty deep. Now we're going to kind of just go into some Q&A, and I recommend listening until the end because there could be little nuggets that could save you $500, little nuggets that could save you not only a couple $1,000s, but that could amount to tens of thousands over the next couple of years. And it's really going to position you for your future as a business owner, as a content creator. And so these are really some money saving tips that every creator should know. And just some general topics that came in from our community tab, Twitter, and other places. So here's the first question, Matt. Jen actually asked this. What's your take on the recent legislation regarding the IRS hiring new people? And should we ultimately be more cautious about taking write-offs because of a fear of audits?
No to being more cautious, but for those of you listening who don't have your books in order, aka you couldn't get a profit and loss schedule, I would be on high alert now. Because if you are flagged for audit, the first thing they ask for is, oh, you spent 20 grand in office supplies? Show me a ledger with all of those transactions. I'm going to bet 99% of the time you don't have that. Your accounting software will, something like QuickBooks. So I wouldn't be weary about taking deductions, but I would be very weary and concerned if you don't do your bookkeeping.
Okay. And so, and also just back up on the story. So what was the announcement? The IRS said they're going to hire like
87,000, which to put that in perspective, because a number's a number, they only have like 77,000 that work for them now. So you're going to more than double the entire staff of the IRS.
And probably be coming after small business owners.
1,000. They say they're not coming after, well, I've seen it, that they're not coming after people or small businesses that make less than 400,000. Complete lie. It wouldn't work that way.
And that's so interesting that the question was, wow, should we shrink back? Should we be afraid? Which I wonder if that's even the message they want to send.
Potentially.
Because
it's interesting that was the question.
It's interesting that's the question because what I'm hearing you say, and this is I actually want to double down even more. I want to triple down on my education, but you're also saying, and take as many ethical, write-offs and deductions as possible, but you're saying you got to have good books.
Be wary if you're going to be messy.
Yeah.
If you're going to be clean and organized, you're doubling down on the opportunities is what I want to call them. aka deductions.
I love it. Now here's a question. If you use a credit card and you then also get cash back for points, are those taxed deductible?
The cash
are
back
they taxed? Is the cash that you earn?
Yes, the cash back rewards that you earn could become taxable.
Taxable income.
Yes.
What about travel points?
Likely no, but again, the fair market value of what you received, which is therefore the flight cost, could be taxable. Likely not.
Got it. Okay, so how would you recommend bookkeeping on that?
Flight costs, keeping sort of your itineraries for the value of those flights, and then credit card reward points. If you're getting that as cash back, that's going to hit the bank. That's going to hit your credit card as a credit. So in your accounting software, you would hit it as income.
All right. So Marcos Ortiz asked, taxes for content creators. People wonder if I work for YouTube, are they going to report my income to the IRS?
Yes, through a 1099. All a 1099 is a tracking mechanism, basically saying, hey, I paid John Smith $100K, which means we're going to write it off. So what he does with it is his own business, but that is definitely a tracking mechanism and them telling the IRS.
And some people wonder too, they go, well, if I make less than $700 or less than $600, like I don't have to pay taxes. Is that true? Very
untrue. You could have $200 of income because you sold something on Facebook Marketplace and that could be taxable. But so I wouldn't rely on whether you got the 1099 or not. So many people don't cut them.
Got it. So the key with the 1099 is they start being issued at a certain amount.
Exactly.
Which is like what, 700?
$600.
$600. And
I love the Venmo memes out there with this.
Yeah, sure. So the mistake that people make is they just think, oh, well, I'm trying to stay under the radar here. Technically, you're required to report all income.
Exactly.
Okay, so his second question was, and to actually double down on that, so now it's your responsibility. YouTube's going to pay you. They've offed it from their books.
Oh, yeah.
But you're responsible to report your AdSense earnings, which comes as a 1099. And whether it does or it doesn't, it's your responsibility to go in the back end of Google and be like, oh, shoot, I didn't change my address. Oh, I didn't update my email. I didn't update. You got to make sure that you're going and thinking about where are you collecting money? Like if someone's sending you money, you could think about the records, and that would be coming from YouTube. That'd also be coming from someone like Amazon. We recommend affiliate marketing a lot, and I eventually built a six-figure income of Amazon paying me. That's also 1099 income.
Yep.
And so I'm stacking these up. It gets a little complex for content creators potentially because you might have Amazon sending you money, YouTube sending you money, Patreon sends you money. That's income.
Yep.
Patreon takes 5%, but whatever they're paid. And some people also make the mistake is they think about, well, do I pay money off of, do I have to understand YouTube's cut? Do I have, when is it paid? is it simplifying it to just say, how much money did you get sent?
Yeah, I was just going to say, don't worry about that. Collect the money and keep doing what you're doing. But yes, and that's where accounting comes in. Track the money hitting your bank account.
Got you.
Yeah.
A second question Marcos asked is there a preferred credit card for a business of this kind that you'd recommend for content creators?
I'm a fan of Amazon. I mean, I myself have a lot of camera equipment now after watching the Think channel. Shout out to you guys. Thank you so much. But I'm a fan of Amazon, which I'm pretty sure is 5% cash back towards Amazon. But it's really whatever you want. So if you're a travel person, if you're a cash back person, if you're a perk point person, whatever you want.
That's smart. And I know there's even some people who devote reverse engineering the trip you want to take to the certain travel credit card. We actually just do like a cash back credit card, and then we reinvest that cash. And so there are like creator startup companies like Carrot.
I was going to say Carrot is one. Yep.
Which also just speaks their business model is, I don't know how good the incentives are, but your credit limit is not necessarily is correlated by your subscriber count and things like that, because they just are having empathy for the creator economy, understand that there's different metrics as to maybe what your business is capable of. So they're trusting you with a limit that maybe a traditional business is like, what do? You make YouTube videos? We're going to give you a $2,000 limit. Carrot sees what you're doing. They're like, we'll give you a $200,000 limit. Yeah, that's a great question. Rick asks, what are the pros and cons of running multiple businesses under one entity using DBAs for different businesses? DBA stands for doing business as. So maybe you only have one LLC, but you have a bunch of different DBAs. Is there upsides and downsides to that?
Such a good question. So tax-wise, it's really not going to change anything at all. What I want you to focus on there is risk. For example, we have somebody that flips homes. They now are going to branch out and do education. Once education gets big enough, I'm going to set up a separate LLC. Why? There's way more risk that occurs with flipping homes. Slip and falls, contractors putting nails through their foot, whatever. So to separate the liability, which is again what LLCs are made for, that is when I would separate that out. But if you have one LLC collecting AdSense, affiliate income, you're on stage once a month speaking, you do side photography, those 4 streams, you can have that flow to one LLC, one business bank account, and you're fine.
And is the cons of doing that as it gets more complex, is it going to be, are you trying to run multiple P&Ls under the different LLCs?
I was just going to say, so you don't need to, but in that example of somebody flipping and doing education, as an operator, I want to see how my education business is doing aside from my flipping business. So one of the cons to splitting it up would be separate sets of books. Now your bookkeeper has to keep a separate set.
And so, if you have a bookkeeper, it may just be doubling down and paying them more because now they're working maybe not double the hours, but 30, 40% more, whatever, to manage everything. But hopefully, too, to your point, you're getting more sophisticated. More money's coming in. You're bolting on an additional business. Maybe the businesses, like for us, we realize the same thing with events. We want to separate out events because events take more risk.
Exactly.
But we've made it this far with actually our event. It's all been under one. And as we look forward, we're like, well, we got to be smarter. And we're embracing that complexity. Corin asks, how do you know when you should start paying taxes quarterly? If you suddenly start making money mid-year, do you switch the method of paying taxes? So to frame it, you're a YouTube creator, you finally get monetized, but it's the middle of the year. Do you start thinking about setting money aside? Are you paying quarterly taxes immediately? You're still a sole proprietor. You haven't made an entity yet. What are your thoughts?
So if you want to hold on to the money and not make a payment, you're going to pay 0.5% in a penalty to the IRS, likely going to be very minimal. So if you want to not pay it, don't pay it. We have clients that do that. If you want to pay that, then you can pay that. It ideally is going to be paid September 15th. That's the third quarter payment for estimated payments. You would cut that to the IRS. Or third option, just set that money aside. When people ask me how much money they should set aside because they're self-employed, I honestly tell them 10 to 30 because it's going to be a rough range, right? They may have more deductions than others and stuff like that though. So I would say that's a personal choice.
Got it. And so to be clear though, when are you obligated to pay taxes quarterly?
When you're self-employed and have self-employed income. So basically, if I'm a W-2, my employer is withholding this for me and they're remitting it to the IRS. If I make money because I flip things on the side, I make money from AdSense, whatever the case is, I then now have to start remitting payments quarterly.
I need to think about quarterly. So you
Yes.
could be a sole proprietor. You might be an LLC, might be an S corp. It doesn't matter. If you're self-employed, you should be sending in quarterly tax payments.
Correct.
And like you said, you can just pay that penalty and not do it. A lot of people are behind. They bury their head in the sand. But not only could it save you money, it helps you with more foresight.
Oh, yeah.
It helps you be thinking about being on top of your money, managing your money intelligently. Brilliant. On the Same Page Together asked, any tips for finding an accountant who understands the creator economy in your area or online?
Honestly, a Google search, or if you come across somebody online that is obviously portraying themselves as somebody as an expert in that field, ask them when you have a call with them or their team. This is my situation. That's what the 2 minutes or the DM is worth. Like, hey, this is my business. Are you versed in it? They're going to tell you yes or no. And then by then you got to do a little bit of your own due diligence, like maybe ask somebody that you know works with them, or do a little bit more rabbit hole searching online. But totally try and ask them questions as to what you're doing and say, hey, could you help me?
That's a great point. Having some good questions ready related to your business. And a couple of thoughts is listen to these 3 episodes to think about the questions. So this whole series probably has you thinking entirely different. And if the CPA accountant you're talking to is completely mystified and has no clue, then they're probably not the right person. And then again, secondly, if you want to connect with Matt and his team, all they're there to serve you and answer your questions regardless, see if it's a good fit. That's thinkcpas.com. And you can also follow Matt on social media. And there's others on social media as well. I like the same, one of the prior guys we work with had a big YouTube channel. I obviously like that because he was doing the thing. He was into it. And so that's a great tip. Makers Unify says, should you go through the process of applying for an LLC on your own or use something like LegalZoom?
Because the process is very easy. To set up an LLC, for example, here in Nevada where we are, I can do that like in 3 minutes. So I would say if you're confident in doing it yourself, do it yourself. It's really simple. If not, I would pay like a LegalZoom or an online service, because if you go to an attorney's office, like your local attorney, your local CPA, there's a chance they're going to send you a $2,000 bill. And I think I'm much more of a proponent of use that cash flow in your business to do marketing, buy equipment, something like that. So I would use an online service if you're not comfortable doing it yourself.
They go on and they ask, what can you actually write off on your taxes? And I'll point you to the first episode. We went deep into some of those things, kind of like the 5 biggest ones that creators miss. But then they get to a specific question and they say, for instance, I have a DIY channel, a do-it-yourself channel. So I purchase many items to use in my DIYs that I can show on YouTube. Can I write all of this off?
Yes.
So if you are carpentry or crafting, you're going to write your glue off. You're going to write your foam off, your foam board, your staples, all the different stuff, kind of office supplies type of things, all of, et cetera, et cetera. Amazing. And for more on that, I highly recommend check out episode 1. We'll link up the full series in the show notes, but we get more into that in episode 1. Okay. So Don Bird asks, what's the best way to prepare taxes when all of your income is as a 1099 independent contractor?
First, have a profit and loss statement, your income, your expenses. 2 would be, it's going to be on your personal tax return on what we call a Schedule C. A Schedule C is a form that says, hey, I'm self-employed. Here's my income. Here's my expenses. And that's it. So it's really going to mirror what your P&L is just on your tax return.
He then asks, how do you document and deduct paying for your own contractors, editors, developers?
Money is going to leave the bank account through either Venmo, Zelle, a check that you pay them, an ATM withdrawal. And what are you going to do on QuickBooks? If you use QuickBooks, it's going to show, oh, $400 left the bank account. What was that for? Drop down, contractors, done.
Now, this goes a little bit more broad, but I'm glad he's bringing the question up. How do you handle profit sharing when collaborating with other creators?
We do a project and we make $5,000 and the deal is we're going to go 50-50. The end of the day, $5,000, me and you, hits my bank account.
Yeah.
I then Zelle you $2,500, assuming my daily limit is that high. I Zelle you $2,500. When that shows up on my accounting system, I just hit shared service. I hit contractor, whatever I want to call it, and therefore it's an expense. And it would show on my P&L, $5,000 of income, $2,500, because we always get the question, well, am I going to, since the $5,000 hit my bank account, am I going to be stuck with all of that as an, right?
Yep.
Or as income? No, because I just spent $2,500 to you.
So the nuances of how you're structuring the deal, that's entirely up to you. Punchline is, it doesn't matter if all the money comes to you, so long as it leaves.
Money in, money out.
Yeah, so long as it leaves your business, it leaves your 1099 Schedule C. Exactly. Now it's on them.
Exactly.
And so then they're responsible tax-wise. And that's actually one of the cool things, ultimately, I mean, you think about ways of getting a write-off, paying people more, finding ways to hire people and help them win with you. That's your goal as you build a team, is help people around you win. Obviously, that money leaves you. Now they're responsible for the taxes, but it would get that off of your books. All right. That able disabled guy, he says, would you please ask how YouTubers can set up a nonprofit or a not-for-profit instead of an LLC? What are the tax pros and cons for like a nonprofit?
So the first thing would be, most of the people entering this business are in it for profit, or at least to use the proceeds for something that they need. Nonprofits are very strict on what you can use the money for, and it has to follow a mission statement that you get approved by the IRS. So you'd have to go through somebody who would set that up for you, and again, have a mission statement that you feel would be approved by the IRS.
So is it possible, we have a lot of ministries and people like Christian YouTubers that watch our channel. If they're mainly going to be making videos and even having like brand sponsorships from like Christian Mingle dating app, but it's a ministry, like, and maybe they have a local church or they're also a traveling minister, is that situation, and I guess I'm assuming like that has been approved by the IRS, is there then some pros and cons for that? Or is there too much YouTube income for that not to work as a nonprofit?
It wouldn't be a question of too much income. It would be, so yes, I think you could set that up, right? I think we've seen precedent of that. But it would be, are you comfortable with how you have to spend the money once you set that up? Because if the goal is to set that up, but then really use the cash for personal use and to do other business deals with, you may not have that flexibility because the cash has to stay within that foundation or organization.
So the limitation of the nonprofit is maybe there's some quote unquote tax advantages if your mission is just to grow the mission as big as possible.
Exactly.
Hire other people, expand more, and
do more of that.
And you set a reasonable salary.
Yep.
But basically, your reasonable salary is kind of the cap of what you're taking out, and everything is staying in the nonprofit for the furthering of the mission.
Exactly.
If you want to be a Christian YouTuber but have a lot more freedom and flexibility, you should just be for profit.
For profit.
Got it.
But then just buy real estate, and we'll get you to pay no tax.
Yep. There you go. And listen to episode 2 for more tips on that.
Yeah.
HPM Wellness says, do you need to have insurance if you're selling courses that are related to fitness or nutrition?
Tax, that's not required. As a friend advisor, I would say probably not a bad idea.
Because I guess fitness, they could get hurt. Nutrition, they could get hurt.
You recommend something, someone does it, something bad happens, they sue you, your insurance covers it.
That's smart.
Ideally.
All right. Now, one other question for you, Matt, and that is any kind of resources you'd recommend for people that are on this journey. They want to get their life in order, their finances in order, and they also want to continue their financial education. Is there any books, software, things you recommend?
Yeah. Book, Rich Dad, Poor Dad by Robert Kiyosaki. The reason I love that is I feel like it's going to give you the mindset that you need to get into being a business owner and why it's so preferential. It's not this bad thing. It's great. So that book is really going to help hone that in. 2, software. If you leave with one thing today, it is the importance of doing your bookkeeping so that you can meet with an advisor to help you. And I would use QuickBooks. I'm not affiliated with them. I just simply love it. That's what we put our clients on. That's what I use personally. It's the easiest software out there. And then to get a little bit more nerded out on a software, if you use a vehicle for your business and you want that big deduction, something like a Mile IQ.
To track your mileage and write it off.
Yep. Rich Dad, Poor Dad, and QuickBooks, though, those alone will really bootstrap you.
Amazing. And if people want to connect with you, you're always sharing great information and resources, especially on your Instagram. What's the handle?
At Matt Bontrager.
Amazing. And then a couple other resources is if you want to connect with Matt and his team, that's who we use here at Think Media as our certified public accountant. They're based here in Nevada. Ryan Pineda and Matt co-founded TrueBooks. And we love them because as you continue to have more, well, first of all, they're content creators, so they're in the creator economy, but they're also incredibly smart and specializing in real estate. And so if you want to just connect with them, see if they're a good fit for you and your business, as well as know that we referred you so you can get a great deal. If you go to Think CPAS, so thinkcpas.com, videosuccessSecrets.com. Of course, those will all be in the show notes. And then I also want to recommend, if you haven't checked out our recordings from our event, videosuccessSecrets.com. The event was actually called Grow with Video Live, but we've turned it into an online course, 3 days of content. The third day was devoted to advanced business strategy. We had like Brad Lee speaking, Ryan Pineda, you did sessions. There was a panel during the first 2 days. There's a great special sale happening there as well. And so if you want to invest in your education more, that is a write-off towards your education. It's going to help you get,
100%.
yeah, it's going to help you get more views, help you make more money, but also get your financial intelligence higher as well. I definitely recommend that. That's videosuccesssecrets.com. It's an online course of a 3-day video marketing, social media, YouTube, and business event. Matt was one of the speakers. Check that out as well. Matt, I am super grateful for you pouring into us during this 3-part series, marathon mode. I'm excited to have you back in the future.
I appreciate any time.
So I hope you've been getting massive value out of this 3-part series with Matt. And I want to encourage you, all 3 episodes are live now, whether on the audio platform you love to listen to the Think Media podcast on, or on the YouTube channel. And so block some time, and I encourage you to listen through all of those. Now, these are the kind of episodes where it's probably good to listen with a pen and a piece of paper, as well as writing down next steps. So I do want to encourage you, as Matt has told us, it's probably time to start getting our receipts and our books in order. It's probably time to sign up for QuickBooks Online. It's probably time to potentially decide who's going to be filing your taxes, and do you need to pick out a new accountant or a new CPA? Do you need to download Mile IQ so you can be tracking any kind of business-related mileage, and all of the above? And so block some time, because even though this isn't necessarily the funnest topic to talk about, let's just go viral. We'll figure this stuff out later. I definitely understand that mentality. But what I've learned, especially if you want to play at higher levels of the game, you got to get started now with your education. For me, I read a book called Rich Dad, Poor Dad, which of course we'll link that up in the show notes. I read it back in like 2007, 2008. And here's the truth. We did not have a lot of money coming in. I was barely making any money, working like quarter time at church. I'm waiting tables at Red Robin. And eventually I started our business, Clear Vision Media. And we had money coming in, but a lot of money going out. In fact, cameras, lenses, video editing, computer, home office, all kinds of different expenses. Now, the cool thing was I was thinking then about write-offs and thinking about deductions in those early days of business. But ultimately, this, if you don't know my story, this is when we got crushed. 2009 was when my wife, Sonia, almost died. We were dual income. And so her income dried up, as it should have, as she was no longer able to work at that time. And we started having medical bills piling up. The church fell apart. I lost that job, and it didn't even really pay very well. And then I was hustling, trying to work in my business. And we also got crushed in real estate. And so I was in a season where there wasn't a lot of money to manage. We were mainly just watching the money disappear. But I never stopped investing in my financial education. I just at that time committed, I'm going to just keep learning about this. Even though these terms seem complex and I thought I understood it, and then I tried again and I had it wrong. And I'm just going to keep trying to get around people that are smarter than me. I'm going to just keep trying to get around people who understand this stuff, talk about this stuff. And now fast forward, since 2009 to, 2022 and 2023. And it's crazy. I first of all think about, we didn't quit, and Think Media has grown, and now Think Media is 22 people. And it's been amazing to see the miracles that have happened in my wife's health through prayer and through doctors and through now having 2 kids and just all these incredible things that have happened, as well as persisting in our business, but also having to grow as leaders, having to grow as business owners. My wife's the CFO. I'm the CEO. What the heck do we even know? We are small town kids, college dropouts. We don't know anything about the tax code, but we committed to learning. We committed to growing. And now Think Media is a multi-million dollar business. We got HR, we got insurance, we got all this different stuff happening. And I would say that one of the things I love that Matt said was you got to be it before you are it. That is not what he said, but he said it was something like that. You got to start walking in the steps, learning about the steps far before you're ready. It's like you got to be thinking big in small places. I think you should be acting big in small places. I think you should never let your small town make you small-minded. And even though I started Think Media from a house that eventually we had to short sell, that we were house hacking with another family and their daughter and two other roommates. And then they all moved out and we couldn't afford the payment. And I was mission command, Think Media Central back in 2010 was me just having a big dream and like not having the knowledge, not having all the answers, me just wanting to punch fear in the face and press record and us just getting started. And then we never quit in investing in our learning and leveling up. We had to learn how to set up employees in other states and all this kind of stuff that could be very overwhelming. But the big message today is just commit to your financial education. Why don't they teach this stuff in schools? I don't know. Why did I go to school for, from K through 12 grade and I didn't learn 99% of the most practical and important skill sets for the real world? I'm really not sure. But what I am excited about is no matter what has happened in your life up until this point, it's always a new day to get the skills, to get the education, to get equipped for the real world. And we're here to help you. So I definitely encourage you, listen to these 3 episodes, connect with Matt if you want to connect with them. And of course, all the different resources we mentioned, we'll link up in the show notes, whether you listen to this on audio or on the YouTube channel. And so spend some time checking those out as well. My name is Sean Cannell, and I'm super grateful that you are a part of the Think Media podcast community. And I want to encourage you to buckle your seatbelt and make sure you're subscribed because we have really valuable episodes coming your way soon. So stay locked in with us because we are on a mission to help 10,000 purpose-driven content creators make a difference in the world while building an income that supports them and their families with YouTube. And so stick around. I hope you're one of the 10,000, and we're here for you every week on the Think Media podcast.